Now, it's been more than 8 years since the start of that crisis, and while Wall Street has pledged to instill a more ethical culture, many say the biggest power players remain untamed. CCTV's Tracy Tannen reports the pressure to act unethically still looms over Wall Street.
Over the last few years, Wall Street has been filled with headline-grabbing multi-billion-dollar settlements. While Wall Street has been working to make bad behavior a thing of the past, a new report paints a more troubling picture. The report surveyed more than 1,200 finance professionals in New York and London. Among executives earning more than $500,000 a year, around a third say they've witnessed or are aware of illegal activity at their firm. And 1 in 5 believe bending ethical or legal rules is necessary to be successful in the finance industry.
Unfortunately, it appears that Wall Street and Fleet Street haven't learned the lesson of the past. It feels like the focus has shifted from how we can be better back to how we can make more money and what's in the interest of our organization as opposed to our clients and the investors.
The report also indicates financial firms may be actively trying to silence potential whistleblowers. 1 in 10 finance employees say they've signed confidentiality agreements that they believe ban them from reporting illegal behavior to authorities.
These agreements prohibit people from reporting large-scale corporate frauds, environmental crimes, public safety issues, everything that might involve wrongdoing involving the organization.
Some experts say government manipulation of markets is partially to blame for the pressure to break the rules.
We're in an inordinately manufactured market environment right now, led to no small extent by Fed policy, zero interest rate policy, which has had enormous impact on what people are doing in financial markets and on the trading side. This is not just merely a phenomenon of what's going on inside the financial institutions. It's not just merely a story about regulation. It's the entire macro environment.
While many executives do sign confidentiality agreements, new U.S. law passed in response to the financial crisis specifically bans firms from discouraging employees to report wrongdoing.
To have somebody sign an agreement that is not enforceable as a matter of public policy solely to intimidate them is not the way to behave, and if banks are doing that, they need to stop.
The U.S. Securities and Exchange Commission is working hard to ensure more whistleblowers come forward. Last year, the SEC awarded $30 million to one whistleblower, and just last month awarded $1.5 million to another. Now these awards seem to be working. Last year, the SEC received over 3,000 tips from whistleblowers across the U.S. Tracy Tannen, CCTV, New York.